please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome to Halftime Report. Well, it's 12 noon. It's a good start to the trading session. The first half has gone off fine. Let's see what the second half holds for us. But as things stand, we're holding comfortably about that 10,050 odd. Surbhi, let's see whether or not going to be the lucky charm for the markets. And in fact, we see a bit of an uptake from here. But good to see we're holding on to those gains.
Straight away, get started with some corporate conversations. We've just got some news out on Dixon Technologies. The stock is in focus after the company signed a design, manufacturing and supply agreement with Flipkart for a number of electrical appliances. Sunil Vachani, promoter and chairman of Dixon Technologies, now joins in to give us some details of what this tie-up is all about. So Sunil, it's a tie-up for design, manufacture and supply of, I believe, TVs, washing machines, etc. What sort of a tie-up is this? What will it mean in terms of additional revenues for you and margins?
Sure. I think, thanks for having me on the show. First of all, we at Dixon are privileged to tie up with the in-store brand of Flipkart, that is Mark. And I think this tie-up really reflects the growing strength of the Make in India campaign. It reflects also the strength of the Indian companies in design and in manufacturing. And some products which were probably imported earlier now being manufactured in India. So I think that's great news for the Indian manufacturing industry. As far as the tie-up is concerned, as you mentioned, that it is a tie-up for designing of the product. So we will be offering our ODM product, our own design product, as far as the consumer electronics segment is concerned. And this would also extend to home appliances and products like washing machines in times to come.
All right, Sunil, just to get a couple of details, this brand that you're talking about, Mark, who owns it? Will it be owned by Dixon? Will it be owned by, Flipkart?
No, this is Flipkart's in-store brand. As you know. This is their own private label. That's right, yeah.
Okay. In your discussions with them, do they have some kind of a revenue target? When exactly can we see first revenues coming out of this new brand? Will it be in FY19? Will it take a year or so to translate into revenues?
So we've already started the relationship. The production has already started. Dispatch and production has already started.
Okay.
But as far as the target for revenues, I think that'll be difficult to share right now because, as you know, that is privileged information. But what I can tell you that I think if you look at the experience in the international markets, in the global markets, the private label brands, the in-store brands have a very significant market share in mature markets like US. You would have seen that in Best Buy and many other retail formats across in US. And I think we would see a similar situation emerging in India where such brands would, I think, grab a major market share in times to come. And obviously, it's because of the huge, the distribution strength, the consumer, the kind of number of consumers Flipkart has on the platform. This would obviously translate into huge sales in times to come.
Sure. So I was just getting to that, Sunil. You manufacture these white goods, I mean, washing machines, all the appliances. Flipkart sells it under their in-house brand Mark. How do revenues get split?
Well, so, we would be, as I mentioned, designing the product. We would be manufacturing the product. So you would see that in our, the segments that we report, and we have the ODM and the EMS. So this comes under the ODM segment where we design and manufacture. And that portion of the revenue comes to us. And Flipkart would, of course, would have the, the margins that a brand owner has. Less the distribution and the marketing costs that normally are associated with marketing a brand.
You have enough capacity with you? What is your current capacity utilization levels? Will you be looking to set up more capacity?
Well, as we mentioned during our, at the time of listing, that in our business model, in the manufacturing, ODM and EMS model, one always has to keep spare capacities for new brands coming in. And this is what we had talked about during our roadshows, that one would be looking at such tie-ups. And we're glad and we're happy that this tie-up has come this fast. And I think it's a win-win situation for both Flipkart and Dixon.
Sunil, we still don't have a number from you, I mean, if that's a possibility. By how much will your ODM revenues be boosted with this tie-up? Can you give us, a margin impact sort of a number as well, what it does to the blended margins for the company?
You see, as you already know, that for us, ODM, the margins in the ODM segment are definitely higher than the EMS segment. And that's been a conscious decision of the company, a strategic intent of the company to move more and more to ODM revenues in times to come. So this would definitely hopefully translate into better numbers because of the shift from EMS to ODM. As far as the specific numbers are concerned with relation to this order, as I mentioned, I would not be able to share that, but I've already given you the background around this in terms of what growth potential we could look at, looking at the international markets, looking at the experience of other e-commerce companies and looking at experience of other retailers who have launched their in-store brands very successfully in other developed markets. All
right. Before we let you go, 30% on the cards in terms of growth. That's what you have been doing. Is that possible?
Sorry?
30% revenue growth on the top line. Yeah, for this fiscal.
Well, you see, let's put it that way. As you already know that the penetration levels of these products in the country are very, very low. The penetration level of LED televisions, when we talk about, is barely 12 to 13%. The penetration levels of washing machine in the country is barely 6%. So I think it's a no-brainer that the sales in these segments is bound to grow by leaps and bounds. Okay. I think the reason sales were lagging, the penetration levels were so low, was primarily because of two reasons. One was availability of power in all regions in India, and availability of finance, consumer finance, easy consumer finance on good terms. Both these things are changing for the better, are improving for the better. We already talked about power. The Honorable Prime Minister talked about power for all in the next few years. So this will translate into much, much higher penetration level of these products. And as I mentioned earlier, that more and more of these products now would be manufactured in India rather than getting imported from outside because of the huge strength the country enjoys and the Dixon as a company enjoys.
All right. Great. Thanks so much, Sunil, for joining and giving us all those details. All the best for the remainder of this fiscal. Well, we have Goa Carbon's numbers that are flashing for you on the screen. It was expected to be a very good set of numbers. And yes, it's a pretty good set of numbers. Remember, intraday, the stock had fallen close to around 10% from the high point of the day. We're seeing a bit of a pickup. We'll be getting the management shortly with us. Remember, at the end of the first quarter, the management spoke to CNBC TV18, and what they told us was we are likely to see 250 crores on the top line itself. Now that number is roughly around 240 crores or thereabouts. So they more or less achieved that. For the entire of last year, they did around 340 crores. So at the halfway mark, they've done way more than what they had done at the halfway mark of last year. Yes, the numbers look good. Their volumes are already available with us. So just keep that in mind as well. Remember, on a monthly basis, they disclose their volumes. So 37% is the volume growth. We're looking at for the realization growth. If I just put two and two together, the top line growth is roughly around 67%. So the realization growth should be roughly around what? Around 30% approximately. Those numbers look good. They're looking as good as expected. We'll be getting the management very shortly with us on the channel. I'm sure our team is trying them out. Numbers look good, so the stock recovers a goodish bit from the low point of the day. Just 1 year ago, the stock was at 85-90 rupees. So it's already done 5-6x in the last 1 year itself. We'll try to get more details, but those numbers look good. Top line growth, margin expansion, profitability as well looks quite strong.
Market is holding steady at same levels, around 40 points higher on the index, near the 10,050 mark. Lots of companies in focus, and another such one is PSP Projects. The stock has been up and about today, almost 4% higher. This after the company bagged a contract for works at Surat Diamond Boards, valued at 1,575 crore rupees. PS Patel, CMD of PSP Projects, is now with us. Mr. Patel, last we spoke to you in June. I think your total order book was around 725 crores. So now this sounds like a game-changing. Contract, sir, for you.
Yeah, it is a game-changing contract for us, and it is really a prestigious project for us.
Okay, so now with this, what is the kind of projected order book guidance you have for the rest of the year? Because, I mean, within this time frame, you've bagged such a large order.
Yeah, see what we are into project sizes from 50 crore to 200 crore till now. So now we'll be concentrating more on this project first, and all those projects which are getting finished near and around Ahmedabad, we'll be trying to get the orders up to 50 crores only.
All right, Mr. Patel, a few more details if you could give us. What's the duration of this order? How long does it go on for? And also, now I think a high amount of your orders will be concentrated in the state of Gujarat itself. Give us that number as well.
Yeah, see, this is the highest number of orders which we have got, and this has to be completed in a time period of 30 months.
30 months,
So,
okay.
30 months, yeah.
2.5 years, all right.
Yeah,
And
yeah.
this takes your total contribution coming in from Gujarat to what, 70, 80%?
If we calculate, if we put this on 1575 in our total outstanding order book of 2,700 crore now, it will be about 90%, yeah.
90%, okay.
Yeah.
So 90% of your order book is coming from Gujarat. What about revenue recognition? I mean, this is a huge chunky order. So by when do you start recognizing the first bit of revenues from it?
This is a very large project. Even the foundation breaking and everything will take too much time, and the mobilization period will also be about 1.5 months. Probably we'll be starting mobilization after Diwali. So we are hoping some revenue generation of about 150 crore if the drawings and decisions, everything is ready from the client side. So then we can expect 100 to 150 crore revenue generation from this project till March 2018.
So 150 crores this year will come in by March 2018, the current fiscal itself. The balance will be in FY19.
We are expecting that should happen.
Okay. What's the margin profile, sir, of this order? Better than what you are currently running at or similar?
Yeah, it will be on the same line what we have been keeping the margins till now.
What, will it be around 14%?
We can see 14%, but previously also it was 14% is usually when the project mix is without cement and steel and with cement steel. So we can expect that this should be somewhere between 11 and 12%.
So, Mr. Patel, you were also looking at some orders in the state of Kerala. Anything come over there?
No, sir, we have not bidded for that.
You have not bidded over there. So, you're not looking to diversify state-wise. Geographically, you're not looking.
Sir, we are trying to look for the projects for which we are expertise in Gujarat. We are doing one dairy in Bangalore already, and last month only we got one more dairy in Karnataka Federation again. So we are focusing more on the projects which we have sent in Gujarat. So dairies or institutions or some good interior projects, hospitals. So we will be concentrating more on institution and projects which we are known for in Gujarat.
Okay, all right, Mr. Patel. We will leave it on that note for the time being. Thanks so much. That is PSP Projects. Huge fillip coming through as far as their order book is concerned with this 1,500 crore rupee order, almost 1,600 crore rupee order. Meanwhile, some more tinkering of rates from the GST Council. It seems to be in line to encourage E&P activity on Indian shores or near Indian shores, which is why the taxation on rigs has been brought down. So import of rigs under lease is going to be completely exempt from IGST, and I guess some of those offshore plays, they seem to be getting excited now.
Absolutely, all of them are excited. Dolphin Offshore, Aban Offshore, if you pull up Ceylon Exploration, all of them, they're running along. And in fact, they're running along big time, so just keep an eye out on those stocks. All of them spike up to the high point of the day. Holding on with gains of close to around 40 points approximately. So let's get into word coming in from Gautam Shah, Associate Director and Technical Analyst at JM Financial. He says that he would be cautious on markets at this point of time, adds that despite positive global environment, Nifty is unable to breach those all-time highs.
Market would have really caught market participants on the wrong foot a couple of times in the last 4 to 6 weeks. But what's important to note is that as a technician looking at the markets on the sidelines, it's pretty clear that there is a fierce battle between liquidity and valuations that is really playing out, because I think 97, 9800 is an area where the market is getting a lot of liquidity support, and at the same time, every time it gets to 10,100 and beyond, you know, the valuations and the overseas investor comes into play and does not allow the market to get past that very easily. I think the upside from current levels does look limited. and we are still working with the view that from around 10,100 you could see a turnaround and the market goes back down and tests that low of 96.80 once again in the next 4 to 6 weeks. So we would be a little negative and cautious on the markets at this juncture. In an environment wherein geopolitically nothing substantial has happened, it's just been talk, and it's almost as if the markets have got missile proof, and at the same time, global markets have been so steady. So it's a little discouraging that despite such a positive environment, the Nifty has not been able to make a higher high. And what's important to note is that the comeback of volatility, I think, is a sort of an indication that there is indeed selling pressure at higher levels, because in the prior 8 months we always talked that all corrections were very shallow in nature, just 150 points, and now corrections are getting larger.
Okay, so that was a cautious outlook from Gautam Shah of JM Financial. The market has cooled off a little bit from the highs of the day. It's given up a couple of points. Maybe we should put up 2 banks as we go to our technical experts. SBI is now pretty much faltering to the lows of the day. Let's get the intraday up on SBI and also ICICI Bank. That's one big problem area and a pressure point for the market. And ICICI Bank, that was doing better in the morning around open, is also facing some headwinds now. Ashwini Gujral and Sandeep Wagle joining us. Ashwini, let me get your sense on trade so far. And what do you make of some of these larger banks?
Which ones?
SBI and ICICI, the weaker ones.
See, they are both in bear markets, and I don't know why we use a halo around them. SBI is now 25 rupees lower than its 200-day moving average. ICICI is standing at its 200-day moving average. So chances are, if they keep going this way, they will get off the radar. So definitely stay out of them. And if you are in them, move on to better banks like Yes Bank, IndusInd Bank, etc. And I don't know why these bank managements are not getting the message. People are checking out. This is fund selling which is happening. Otherwise, large stocks do not start falling below 200-day moving averages for nothing. As far as the market is concerned, this is a good time to get long on the market. 12:30, 1 o'clock is a time when a fresh move generally tends to start. If Europe opens well, I think we could see follow through. The banks to focus on are the smaller private sector banks. Something like Karnataka Bank is a buy with a stop of 149, target of 161. Aarti Industries is a buy with a stop of 920, target of 945. Bajaj Auto is a buy with a stop of 3150, target of 3300.
Ashwini, you're going long on the Nifty. Where does the stop come in at?
See, yesterday's high, which is about 10,040 thereabouts on the Nifty futures, is a fairly decent stop. And what you are playing today is basically expansion from yesterday's narrow range. So I think if the market has to expand, it should not get close to yesterday's high.
Okay, all right. Ashwini, thanks so much for that. Well, let's go across to Sandeep Wagle. Now, Sandeep, you have a few picks for us?
Afternoon, Nigel. I would go with the buy in a DCB, stop loss of 187, target of 196, and a buy in a MRPL, stop loss 127, target 135.
All right, Sandeep, thank you so much for that. And thanks to Ashwini. Experts on their expectations from the Q2 season. Take a look.
We think this quarter, if you get away with something like 450 rupee earnings on the Nifty, it will be a very, very big surprise. I see low single digits. I don't see 7 or 8 being crossed. And we are aware of all the, headwinds which we have. Already you've had 2 companies which are large bellwether which have already warned. So that was HUL on the consumption side and L&T on the capex side, which was telling you that this quarter is maybe a washout for some of them. More or less, I would expect 450 to be the target, and this quarter could be quite a washout.
If you consider the non-bank and non-oil sector, the earnings growth that we are sort of looking at is close to 9.5%, a top line growth of something like 10.2%. EBITDA is growing at something close to 10%. On the one side, you have a sort of sort of a demand stimulus led by larger government spending, you also would have a scenario where margins will be under pressure because of the increase in raw material prices. So I think in this quarter, since you have a dislocation relating to GST, an inventory built up, inventory run down, all those things have happened. So I don't think this quarter will necessarily replicate or sort of symbolize what will be the trend going forward.
What we are looking at is an IDFC universe growth of about 9% for the whole year, which is about 3% growth for the first half and about 12% growth for the second half. But having said that, this quarter in particular, we will be seeing a 6% growth in Nifty estimates and about 4% growth in the IDFC universe estimates. Now, having said this, it always masks, these aggregates always mask the outliers and always mask the performing and the non-performing stocks. The commodity-based space is where you will see more upsides, and with the commodity prices staying firm, you will continue to see more upsides in the stocks also relating to this space.
Index was doing a relative underperformance, but just take a look at a few of these stocks that are spiking up. Century Ply, Surbhi and me were just talking about it. That stock, in fact, spikes up in the last few minutes. We have Sri Digvijay as well. Remember, the last couple of quarters, the numbers haven't been so good. This time around, Sri Digvijay Cement, they're coming out with their numbers, and they're coming out with it a tad bit earlier, I think so. So you should get the intraday chart as well of that one. It was in the red when we started off the show. We'll get it at some point of time on the screen. Sri Digvijay Cement is the stock that we're talking about. Well, let's move on then. Let's get in our commodity guest. We have Dharmesh who joins us. Hi Dharmesh, good day. What are the strategies you have for us?
Good morning. I'm like for the bullion pack, we'll start with bullion. I'm still expecting the market to show some kind of consolidation with FOMC minute tonight. Then you can see the volatility coming up in the market. Especially gold, if you see the price is actually trying to breach the 1300 level mark. So short term, I'm expecting the market to spike up further. And with rupee concerned and rupee getting depreciated with 20 to 30 paisa more, you can see the domestic market to show firmness, and you can see a rally of 300 to 400 rupees in coming intraday or maybe a day or so.
Okay. Dharmesh, do you have a trade on oil? I think the market got a little excited after OPEC commentary that things are rebalancing and they're expecting production discipline to also, or the discipline on the cuts to continue.
See, right now there is a war of words going on between the OPEC and a non-OPEC country going on. But if you have noticed, the price has not gone anywhere. It's moving between the 10% range of around 47, 48 to upside maximum 53. It's not going any direction. Nevertheless, I'm still bullish. I'm expecting the market to continue firmness. Any decline is a good level to accumulate. But in domestic side, I'm expecting around 3350, 3370, the level where the market will consolidate. But it is not going way below 3000 level mark. So any buyer who is long-term investing in energy pack for holding for a 3 to 6 months horizon with an investment return of 10 to 15% on absolute term, then below 3000 is a good level to accumulate. And internationally in WTI, 47, 48 is a level where market has taken a support. So short to medium term, I'm still bullish, and with winter demand coming in coming months, then you can see a market rallying to 53, 54, whereas 3500 to 3600 level mark in domestic market price. And
you're also bullish on copper. That's a buy call?
Yes, I'm very bullish on base metal pack. In fact, for the last 3 to 4 months, the house view is still bullish, and I keep my house view intact. I'm expecting the market to test $7,000 in LME, and in domestic market, with rupee concerned, you can expect the market to test 450 to 460 level in coming weeks. Fundamentally, the market is really showing firmness. The only concern which come across is the trade, the Baltic Dry Index. The trade is actually not seeing much, but the demand is really going up. And with supply constraint with China, I'm expecting the market to show further rally. So you can expect the year-end target to around $7,100 in LME. But on the other hand, I'm suggesting all investors to keep a track on aluminium also, which has outperformed other base metal packs, especially 45% return till date, year to date. I'm expecting this to go further higher.
Okay. All right, Dharmesh. Thank you so much for getting us those trading calls. That's the commodity side of the market. Speaking of commodities, as we wind up this edition of the show, from the sidelines of the Sera Week India Energy Forum, Anshu Sharma caught up with the new ONGC chairman, Shashi Shankar, spoke to him about investment plans and the outlook ahead. Take a look.
What are the targets for ONGC in terms of increasing production? There was a meeting with the Prime Minister yesterday. What has ONGC committed from its side?
No, in the Prime Minister's meeting, there was no specific targets were discussed. These were all broader issues which concerns the industry, and there were advice from the global leaders. So as such, this meeting was not meant for any specific targets.
So what is the production targets for both oil and gas for ONGC this year?
This year, the exact number if you're talking about, it's about, I'll have to check on these numbers, so please bear with me. So exact number I'll be able to tell you after referring to the documents.
Do you plan to increase the production this year? Any percentage if you could give?
Yeah, there is going to be an increase in production, especially on the gas front. There is going to be a substantial increase. Oil also there will be increase, marginal increase. And going forward, as we have prepared a document in view of the call given by the Prime Minister of India. And we see a substantial increase in our gas production, and it's going up from present 60 million standard cubic meters to in excess of 100 million standard cubic meters. So, and for which we have already made investment decisions, and projects are at different stages of progressing. So I think hopefully we should be able to.
How's the capex going for ONGC?
Capex, we are one of the few exceptions which has maintained its capex despite this depressed market condition. So we have, though we have kept our capex at the same level in terms of absolute numbers, but in terms of physical program, there has been a substantial increase, because as you know that at this reduced prices, the cost of services have come down. And people are talking about now operational excellence. So efficiency part also, there has been substantial improvement. If I can be a bit specific, last year on drilling front alone, there has been improvement year-on-year basis of 25%. Okay. That's a very good number. So if you look at terms of the physical work program, there has been a substantial increase.
Okay. And my last question is, when can we expect closing of acquisition of HPCL? Where does it stand right now?
As of now, I'm not in a position to tell you anything, because now government from their side, they have engaged consultants for valuation and other things. So